Right, a warm and hearty welcome to our continuing series of conversations focusing on the East African region and the banking sector and the critical role they are playing when it comes to economic growth and development. Over the last 4 weeks, we have covered matters around digital financial inclusion. We have talked about issues regarding green finance and how MSMEs and households can tap into opportunities. We are now going to discuss issues regarding green finance within the context of the banking sector in East Africa. And this morning we are privileged to have Mr. Tony Francis NTORE, the Chief Executive Officer of Rwanda Bankers Association, who will be giving us invaluable insights in how the sector is playing its role as far as this is concerned. Before I get into the conversation with him, let me just remind you, the hashtag is CEO Chat. The hashtag is CEO Chat. You can use that to be part of this conversation online, and you can tweet at Kenya Bankers, at Rwanda Bankers, at UG Bankers for the Uganda Bankers Association. And we also have the Tanzania Bankers Association on Twitter, so you could also tag all three of them and be part of this conversation, and we'll be happy to sample some of your thoughts as we continue with this conversation. Remember, our guest this morning is Mr. Tony Francis NTORE, the Chief Executive Officer of the Rwanda Bankers Association. Let me take this moment to invite him to introduce himself and to make his introductory thoughts. Mr. Tony, the floor is yours.
And KBA for inviting me and share some thoughts about the green finance. My name is Tony Francis NTORE, as Julian said, and I'm the CEO of the Rwanda Bankers Association, the umbrella body of Rwandan banks. I'm delighted to join this session today to discuss a subject of great significance: the adoption of green finance in East Africa community banking sector. Green finance is not just a buzzword. It represents a paradigm shift in the way we think about finance and its relationship with the environment. It's an approach that prioritizes environmental sustainability, recognizing that the choices we make today has a profound impact on our planet's future. The East African community, home to a diverse range of ecosystems, is not immune to the global environmental challenges that we face. Climate change, biodiversity loss, resource depletion affect our region, our communities, and our economies. As banking professionals, we acknowledge our responsibility to address these issues as mentioned. Green finance offers a compelling solution to these challenges. It encompasses a range of financial products, services that support projects and initiatives with environmental benefits. These can include renewable energy projects, sustainable agriculture, energy efficient building, and more in East Africa. Allow me to illustrate this transformative journey by sharing a remarkable example from one of these East African countries. Rwanda is renowned for its breathtaking landscape and vibrant culture. However, it's also a country that has actively embraced the principle of green finance as part of its development journey. In Rwanda, the financial sector has taken substantial strides towards adopting green finance practices. This approach extends to various facets of the banking sector, including investment in renewable energy, sustainable agriculture, and green lending products. One striking example is an initiative by a section of banks to create favorable loan terms to local entrepreneurs and small businesses involved in the environmentally sustainable project. These project range include establishment of energy efficient enterprise. I mentioned one of the countries, but it also has been implemented in other countries in the East African community. Through the program, banks are not only stimulating economic growth, but also playing a pivotal role in fostering ecological preservation. Entrepreneurs and businesses have started to unlock capitals with low environmental impact. This synergy of finance and environmental stewardship demonstrates the remarkable potential of green finance within the East African community. This is proof that green finance is not a trade-off between economic growth and environmental conservation. It's a strategy for long-term sustainability that we look for in the banking industry. Rwanda commitments to promoting sustainable development has been recognized. For example, with Rwanda being one of the first 3 countries and the first African country in 2022 to benefit from financing under the International Monetary Fund's Resilience and Stability Trust, the ARC. This is an innovative and critical new instrument which will help low and vulnerable middle-income countries build resilience to external shocks and ensure sustainable growth, contributing to their longer-term balanced payment stability. To send a strong signal to the international market that Rwanda is ready to receive the ESG investment, our Kigali International Financial Center launched both locally and internationally at COP27 last year, the Rwanda Sustainable Finance Roadmap in partnership with UNDP. This roadmap set the visions and blueprint for positioning Rwanda as a Pan-African hub for sustainable finance, both to attract ESG investment and build resilience and expertise around ESG for our local ecosystem. We have been seeing those examples also in Kenya, Uganda, and Tanzania. Why is this example relevant? Because it exemplifies the transformative power of green finance to drive environmental stewardship, job creation, and economic prosperity, which of what we are looking for the green finance. This is not just an isolated case. It's a vision that resonates throughout the countries of the East African community. As we continue today our discussion, I encourage all participants to reflect on the capacity for green finance to become a catalyst for positive change in our respective country, examples of instruments that are used to serve clients based on investment in the green finance. The journey towards sustainability is not without challenges, but it offers unprecedented opportunity for innovation growth and the well-being of our community. It will be definitely a catalyst for positive change in our respective country. Together, we can drive the transformation of our banking sector in East Africa toward a greener, more sustainable future. Our region is rich in natural beauty and resources, and we must preserve and protect it for the well-being of all. That needs to be translated in our day-to-day relationship that we have with our clients, entrepreneurs that comes to the bank for loans, but again, putting an aspect of green finance in our offers from the banking industry in East Africa. The banking sector, with its influence and resources, has a vital role to play in this endeavor. From this perspective now, I'm happy to enter into conversation about the green finance. Thank you, Julian.
Thank you so much, Tony, for your introductory thoughts. And before I bring in questions from those who are plugging into this conversation, we are discussing this just 4 weeks after the Development Bank of Rwanda launched its inaugural sustainability-linked bond, 7-year tenor, looking to raise about $25 million. How did this make you feel? This is a huge milestone as far as green financing is concerned.
Thank you, Julian. Definitely. We are really proud to say that it's one of its tools that the bank, the Rwanda Development Bank, had put on the market. And I can tell you that bankers here are very thrilled to start enjoying those products, because BRD will be given the loans to banks, and bank will be able to give those loans to their clients. So I may say it's kind of a proof of concept that we are trying here in Rwanda, and then that can be replicated in other countries. And you see, for us having now BRD in its mandate, being the development of the country, including developing sectors, so it comes really at the right time to experience that. And I may say, to give that awareness that our clients need, even the banks, so that we can really align with the agenda on green finance. And we know that, as I mentioned, we had that COP27 where the Rwanda Development Bank went to pitch on that product, and now we are seeing the product real on the market. It is very, very encouraging. We can't wait to see in COP28 also what we can also receive from BRD being part of that organization. So, to respond to your question, it's really a great moment for the banking industry in Rwanda, and also I believe in East Africa. As I said, it is a proof of concept so that we can all benefit. Let's see what the fruits will bring in this community. Thank you.
Thank you, Tony, for that, and certainly setting the pace, and many other countries can benchmark from the Rwandan experience. Let's take a question here around: how does integrating ESG impact on financial performance of an organization?
Good financial performance of an organization. That's a very, very pertinent question, in a sense that when you look at the organization today, it greatly hints with the quality of its decision on how it mitigates and manages risk associated with those activities. For instance, banks can face what we call transactional, financial, or even physical liability risks if they fail to embed the ESG consideration in their lending practice. And we have seen even those multilateral, either IMF, World Bank, IFC, name them. On the environmental front, it's evident that climate change is one of the most defining concerns in this century. So we really need to take it very seriously in the banking industry, as it affects us. It can even affect the assets of the banks. Banks are greatly affected when their client, for example, operation, are adversely impacted by climate change. We have seen that. With increased occurrence of flooding, we have seen drought in different parts of the East African countries. Even in Rwanda recently it happened. It changed raining patterns or unexpected fire as a result of the climate crisis. Collaboration devaluation may occur. If it happened to one of the clients of the bank, definitely the bank will be affected. So banks' clients may find hard to meet their loans obligation, but having a stranded asset presence, a financial risk is a financial risk for banks. I may say, additionally, liability risk may arise when a borrower's activities leads to penalty, for example, and legal recourses for not adhering to the environmental laws, which directly or directly affect the society. Banks are called really to strengthen their governance structure to ensure this is avoided, because, as I mentioned from the beginning, it has consequences. In case where they failed to do so, they are susceptible to reputational risks, which will affect investors, stakeholders, clients, even confidence. So we need really to look it as an asset and not as a challenge to the industry, especially when it comes to the financial sector, banking sector. So to manage and mitigate these risks, banks are called to integrate ESG framework. And these policies in place should clearly require a rigorous risk assessment procedure. And with the ESG framework in place, banks are able to attract even sophisticated investors. Further, they are also able to gain more clients who value businesses that look beyond their financial return, apply to the environmental and social governance responsibility. Just a quick example, 2 weeks ago, I was discussing with the CEO, he's the CEO of the Kigali International Financial Center, where even they build this ESG framework. And he was really putting the importance of nowadays in the future to have this ESG in place for banks. Otherwise, penalties, reputational risk from clients, from stakeholders will be impacting the assets of the bank. So really, it's pertinent to talk about it today because it will affect our future.
Tony, many times when you talk about deploying funding towards green investments, one of the challenges which has been raised is the issue of lack of a steady pipeline of what would be called bankable products. I don't know what thoughts you would share in terms of the available projects which are available for banks then to extend credit towards green financing in Rwanda, in the region.
Thank you, Julian. Definitely, we are seeing challenges when it comes to product or loans that are offered when it comes also to green finance. I can give you an example. Let's say, for example, in the construction. Nowadays, if you have a construction to do, especially if it's a commercial construction, talk about high-rise or a big building, definitely the environment impact on that loan will be very high. So if you don't follow the ESG framework as it is, it will be very difficult even for the bank to give you that loan that you may expect. And even, it will be even more costly for you as bank to be able to give the banks in order to get that loan. Again, if I take that example of the Rwanda Development Bank, the bank will not get that loan from the client if they don't fulfill all those requirements of the ESG framework. So instead of bank being penalized, they will definitely ask the client, let's say, as I mentioned in construction, to fulfill their mandate. And that comes with a cost. You have to follow up with the regulation on the environment. That comes also once you have fulfilled your obligation. It brings less guarantee to the banks. So it becomes now very, very important for that client to master and to really align with the ESG framework. So to be able to obtain that facility or that loan. I talked about construction. I may talk also about agriculture sector, where we see now more funding coming. We have in Rwanda, as an example, 70% of the workforce in agriculture, and it's similarly the same in the East African community. So agriculture also having that framework of ESG become for importance for the bank, for the client, and also for the funders. As I said, in this case, the Rwanda Development Bank. So for us, really looking at as the industry, as the banking industry, we can't insist enough so that clients, potential clients, different sectors, be part of this journey of ESG framework. We have started even to do what we call an awareness on ESG, so that people can be familiarized with the ESG, can understand the impact, can also ask questions for where they feel they don't understand. Having said that, we have also the regulators in our respective countries that are look at the ESG, that mandatory rules or regulation that could be implemented in the industry. So Having the regulator on our side, having the funding partner on our side, and the client and the shareholders, we can only go forward with the ESG framework for our client, as I mentioned, in different sectors, agriculture, construction, and others also to follow up.
Thank you, Tony, for that response. Let's take a question from Elijah Isabu, who was shared via Zoom. And let me just remind those who are plugging in that you can share your questions via the chat function. So Elijah is asking, is RBA working towards adopting climate and nature risk management guidelines? As you have well put, we have very rich natural resources that we need to harness, but at the same time protect. So the anchor question is RBA working towards adopting climate and nature risk management guidelines?
Thank you for these questions. It's an important question in the sense that, yes, this is an exercise that we are doing. As I mentioned, we have our partner, Kigali International Financial Center, which is the umbrella to attract investment in the financial sector, in the banking sector. So working very closely to them, they are guiding us now to implement that ESG, that climate framework in RBA, which definitely has an impact to our members. Because what we are doing now is at the level of RBA, but we are making sure that our members bank also are implementing it. Why am I mentioning Kigali International Financial Center? Because looking at Kigali wanting to be a financial hub, it will be difficult in that case to invite an investor from abroad. And we have not implemented those climate framework and ESG framework, which now being integrated part of our offers to the potential investors that are coming. And I recall also in other jurisdictions, Kenya, Uganda, and Tanzania, looking at how we can really frame this as a region, starting from the country, but doing it as East African region. So we can have a framework on climate that reflect our 4 countries in Africa. So it's pertinent to look at it. We are in the process. We haven't done the process of implementing the climate and ESG framework, but it's part of our main to-do list for next year, so that we can be able also as I may say, as the association or the umbrella for banks, being able also to showcase what we have been doing or what we did with that ESG and climate framework. So for us, we look at it really as not only mandatory, but it's a must to have, not a nice to have.
Thank you so much for that. Still on the questions from Elijah Isabu is asking, how does RBA plan to assist banks in cascading ESG requirements to clients as a minimum requirement for financing? How does RBA plan to assist banks in cascading ESG requirements to clients as a minimum requirement for financing?
Thank you. Our strategy on that aspect is as an umbrella. First of all, we have different committees that we are part of it. Committee of Treasurers, Committee of HR, Committee of Risk and Compliance. Knowing that we have the regulator also looking at it, and it's part of also the mandate of the risk manager and the compliance manager. We have regular meetings where we assess now where are we? What is the journey ahead? Because what we frame to do is really to assess any challenges that we may have before it happens. As an example, I mentioned Rwanda. You mentioned Rwanda Development Bank that is now has brought that sustainable fund. Again, to be able to benefit for that sustainable fund, there will be also all those criteria that will be put in place. So that's why now we are also working very, very closely with the Rwanda Development Bank to assess how banks can get those loans based on the the criteria for climate and also green finance. It will be very important now to say that all those banks have started the journey, but they are not at the same level. For now, our association, our RBA as an association, we have a mandate kind of to facilitate or to follow up on that journey in case they have issues, in case they have challenges, in case they have illustrated cases that they want to share with others. We look also around us, around the region where we are. But it's important, again, to mention that our mandate is also to follow up where they are, to follow up how they are doing, because within the 5 years, it will not be even, as I mentioned before, and nice to have, it will be mandatory for all banks as a regulation. So let's take advantage, or let's take the opportunity of this kind of time we have, which is kind of try and error period that we have to master that climate and ESG framework. So to respond to his question, really, yes, we are part of it. We are that journey, but we are not yet done. Thank you.
Thank you for that response. We are taking now questions from Monene Kinoti from Kenya, who is saying, you have talked about the importance of ESG, and recently I was preparing a pitch deck for one of my clients who uses textile waste to make fashion accessories and other coconut husks. And the question they're asking is, how important is the ESG knowledgeability or knowledge on ESG for companies looking for investors, and what steps do I need to take for my clients looking for investors? So here's a guy who's advising some clients, sounds like MSMEs, and the question is, how does ESG impact their investor readiness?
Great. Definitely, we are talking about clients. As I said, banks have to be ready, to have the readiness for the ESG. But on the side of the clients, we also have to be to facilitate them. When I say facilitate them, is even to give them training to the client, because at the end of the day, it will impact both the client and the banks. So there are stages where now there is an implementation of ESG framework. I have seen BRD as an example here in Rwanda, BRD giving trainings to their client about the ESG framework, and where they start really is from the basic. What is the ESG? How does it impact your day-to-day work? What are the penalties when you don't apply it? How does it affect your portfolio? How does it affect your profit? I mentioned some minutes ago about having the drought, having the fire. If then you don't have those complied framework ESG in place, and you have such incident of fire, that's how you realize the importance of having the ESG. So it's not only to have a drill to know how to overcome this fire in case it happens as a crisis management, but it's also how now does it going to impact you on operation, on risk, on compliance, so that you can be able now to be to level your performance, because it will definitely affect you one way or the other. We have seen, let's say in ESG, that banks are well equipped to integrate the ESG agenda. So why don't we take advantage, as we have banks that are really well equipped as banks, to train those clients, that really need to understand the ESG and in the ESG. I can give you an example. Recently, the Central Bank of Kenya issued a guidance on climate-related risk management, and that requires banks to entrench consideration of financial risk that emanate from climate change in banks' governance structure. So we can then, from that, also take advantage to inform our clients from the bank's perspective about that guidance on climate-related risk, so that clients can own it can understand it, but we can facilitate that journey also. We are all in the, I may say we are all in the same boat when it comes to green finance. As I said, it's not just a trade-off, but it's something that we need to live with and compose with. So for me, for the client, it's important that they get to know, but it's important also the bank to facilitate the client by either training, informing, or participating in an awareness campaign. As I said, central bank has given guidelines. Why not take advantage of that, especially in Kenya?
Thank you, Tony. There's a question here around what are the key drivers of green finance adoption in East African banks?
Thank you. The key drivers when you look at it is an aspect on the environment, an aspect of green. Give you an example. We look at now any construction in Rwanda when it comes to commercial has to have some standards when it comes to environmental, green. How much energy do you use? How much solar do you use in the organization? How much do you do to recycle the water that you are using? We have seen also banks offering products that really attract clients when it comes to green, when it comes to climate, so that it's kind of promoting the green, so that the client who takes it gets, let's say, a better interest rate. We have seen those kind of offers in the bank where they want to attract, but also to inform the clientele. This is what we have now. If you take it, you have a better offer on the interest rate. But again, you have different aspects that you have to consider when it comes to green, when it comes to green finance. So the key drivers really is really on the environment, is really on the offers from the bank, is really also on the regulation, to follow the regulations that comes with the green finance. It's a package, but I think both actors, banks, client, partners, even shareholders, if we all manage to work in the same direction, I think that those key drivers will be implemented well. There will be challenges, but I think we are ready to face those challenges so that we can bring even opportunity over those challenges, as I said. Thank you.
Thank you, sir. Question here, what are some of the common challenges banks are facing with implementation of ESG regulations, and what role should regulators and professional service firms play in addressing these challenges?
Thank you, Julian. One challenge banks face in implementing this regulation is the institutional overlap of regulation. We have many regulations that comes around the green finance that overlap, and then the institution as a bank find it very difficult even to find itself. There should be a deliberate effort made by the policymakers to kind of define and demarcate the role to avert confusion. We have seen really a lot of confusion and even interpretation. If we receive, let's say, for example, a regulation, and between three banks we have three different interpretations of that regulation, there is a problem. And that's where you see now the gaps. If I can interpret my own way compared to my competitor or any other banks, we need now to streamline. We need the policymakers to streamline so that we can have one understanding of those regulations. Because again, as I said, there has to be a deliberate effort from the policymakers to define and demarcate those roles to avoid confusion, which also can lead to bank exposure to transitional, as I said, and financial risk. And we know financial risk related to the green finance can have a negative impact on the asset. So our call here is really to the policymakers, to the regulators, to kind of reconsider or sit again and make it clear to anyone that that use those regulations, including the banking sector.
All right. There's a question here from Elijah. What is your take on integrating ESG risk rating into client overall score to motivate customers to better manage risk and adopt green projects?
Yes, thank you. I definitely one of the spokesperson to have that risk integrated in the risk for the client. Why? It will be on the educational side. The client will be educated. The client will eventually change his behavior, knowing that at the end of the day he will be recognized. It brings that motivation to do something. And I think because again we are talking about green finance. 10 years ago, we were not talking about green finance. So it's new in our environment. It's new in the industry, in the banking industry. So how can we motivate those clients to really have the eager to understand and to practice those ESG? So for me, definitely, I agree with him. I'm the one of the spokesperson to have this included in the risk for client portfolio, so that we see a trend, a good trend in the future of a positive behavior, if I may call it, so that it become a culture in the long run, not just something that we need to do. We don't have a choice, we need to do. No, it has to be a behavior mindset, if I may call it. So the only way, I think, one of the ways, not the only way, one of the ways to do it is really to include in the risk portfolio for the individuals.
Right, good response there. Are there any regulatory frameworks or policies in place to encourage or mandate the adoption of green finance in ESC? I know you have already touched on this with the Central Bank of Kenya, but maybe just revisit your comments.
Yes, yes, I mentioned about the Central Bank of Kenya issued a guidance on climate related risk management. As I said, it will require banks to also have some consideration on their financial risk that emanate from that climate change in banks. It has been the same in Rwanda also. I've seen some guidance are going to be out, promoted soon. So what we have to do now as an organization, as an association, is to follow. But also, as I said again, you follow, but you also train others that behind you, client, stakeholders, investors. It will be needed. So there is a guidance in place. There's a framework in place. I mentioned also Kigali International Financial Center that also released ESG framework guidance that we all follow in the industry. And again, why not again to see in the region if we can really sit together and see if we can really have a common understanding or ESG guidance on climate related. I think it will be a good exercise to do, to exchange and to promote together that guidance on climate related. So happy to do that exercise with my counterpart in Uganda, Tanzania, and Kenya.
Tony, there's an interesting question here. I'm currently a student at Kisii University in Kenya, and I was wondering how green finance can be of help to students.
Okay, interesting. I think as a student, definitely take the lead. You know, there are very few specialists of green finance in the industry. So be one of them. Be one of them. I'm telling you, we'll be running to hire you as an expert. So for me, it's really the next big thing, if I may call it, in the banking industry, even in the financial industry, not only in the banking industry. So persevere. If you can get courses online or physical courses at the university looking at the green finance, take them. Take them. This is my advice, being in the industry. Be an expert. Understand the challenges. Discuss. Look at what is done in other countries, in East Africa, even beyond East Africa. What are the challenges other countries are really facing? Europe, US, name them. So that you will be the expert. You will be the know-how. You will be someone that we can count on in the industry. So for me, go for it.
Yes, there's a question here around what is the status of green finance adoption in the banking sector within East African community?
I may say the status. We're on the. It's a journey. Some have adopted it. Others are in the way to adopt it. I know Rwanda has adopted it. Kenya also. So it's for me, as I said, compulsory to adopt it. Sooner or later, we have to adopt it, and it will facilitate, as I mentioned from the beginning, the conversation with the stakeholders, with the financial sector, with the client that has also adopted the framework. So the adoption is on the way, but I'm pretty sure, I'm very confident that by next year, all the ESG countries will have the adoption of the ESG framework done and in practice.
Yes, the question has been asked as how does someone measure the environment component in ESG? That must be someone who's dealing largely with environmental related uh, projects.
How do we measure it? That's a very good question.
Yes.
There is different tests that are done, different criteria. I may say that I'm not an ESG specialist, just to make it clear. But what I know from the guidance that we have, there is a set of criteria that you have to fulfill in the environmental component. As I mentioned differently, we have the industry in construction, agriculture, and manufacturing. All those set of criteria needs to be measured. How you utilize the water, how much electricity are you using, how much solar are you using, how is your entrance for disabilities are made? Do you have an entrance for disability, which is also part of that component? We have different components. Can't not name all, but those set of criteria exist, and I will be happy to share it with him after the conversation if she or he needs it.
Thank you for that, Tony. Let's take another question here where someone is asking, and I know you've already touched on this, but maybe just for the sake of someone who plugged in midway, what is the importance of implementing ESG frameworks amongst the micro, small, and medium-sized businesses?
Just repeat kind of a little bit. Can you just repeat the question?
The question is, what is the importance of implementing ESG framework among micro, small, and medium-sized businesses?
Thank you. It's crucial. It's very, very important. As I mentioned, if you are doing it from the lens of banking, no one should be left behind, especially those SMEs. The importance of doing it for the SMEs is also the importance of your good financial performance of an organization as an SME greatly impact of the quality of your decision on how you mitigate, how you manage your risk associated with your activity. So it's crucial, it's important that your organization embrace those ESG framework. As I mentioned, your good financial performance will rely on it, and it will be visible. For instance, you have financial and physical liability risk in your company. So if you fail to embed those ESG consideration, definitely it will impact on your lending. It will impact on your loan that you have taken in the bank, because banks are also doing their own evaluation, which are sometimes annual, sometimes every 6 months, so that they will see if that you become at risk for the bank. So, and we know for sure when you become at risk for the banks, either they increase your interest rate, which is something that you don't want as an SME, or they ask you more guarantees, which again is something that you may not want. So I said on the environmental front, for the SMEs, it's obvious, it's evident that that ESG climate will be the one of defining concern for the SME. Now, the SME that will adopt it sooner will benefit from it. You take it time to adopt it, it will impact on your financials. So my advice to the SMEs is be part of this journey as soon as you can. Don't wait. Ask, get informed, get trained, participate in awareness, read about the climate framework, ESG framework. It will pay off. Sooner, later, it will pay off. That's really my advice. And having seen the industry, having seen the direction we are going in, I really ask SMEs to embrace this journey as soon as they can. And as association here, or Kenya, Uganda, Tanzania, I see even my counterparts, we are ready to support. We are ready to support where needed on that journey.
Thank you for that response, Tony. We have a question here around what are some of the common mistakes that banks should avoid when integrating the ESG agenda, and how can they avoid them? What are some of the common mistakes that banks should avoid when integrating ESG, and how can they avoid them?
Okay, now thank you, Julian. Yes, we have seen common mistakes in that field. In ESG, for example, banks are well equipped to integrate the ESG agenda. Recently, as I mentioned, Bank of Kenya, Central Bank of Kenya did it by issuing that guidance related risk management that require banks to really consider financial risk that emanate from that climate change in bank governance structure. It's important. It's very, very crucial to consider that. Now, having the regulator institute as a directive, it is enabling our banks, our industry, to streamline their process and adopt disclosure mechanism, which is again, as I said, I insist, is very important. However, we have seen the few obstacles banks are facing in advancing the ESG agenda. Banks have had to contend with the challenge of a deficient project environmental and social impact assessment by a few registered national environmental management authority experts. In more than one instance, for example, in Kenya, the National Environment Tribunal has had to revoke environmental impact assessment license in project banks have to lend. Now, citing that organization failed to adequately consider the negative effect of pollution while assessing the project of business. So you can see how it can really affect when those mistakes are seen in this area. This is in a few instances has to strengthen with assets in the bank loan portfolio. As I mentioned, Emma, need to train and provide further technical assistance for bank and environment and social risk management unit. We also need trainings, as I said from the beginning. We need trainings, but we need also to train. So to avoid those common mistakes that I mentioned previously. Another challenge banks are facing is also the unethical behavior. We have seen unethical behavior among the borrowers. For instance, some banks' clients have altered the project designs after acquiring the license, the environment license. So this can be mitigated again when banks actively engage with the client to determine whether They're operating above boards by studying the history. And I can really add that the board of a company needs really, the boards of companies, yes, and boards of banks need to be aware of those common mistakes, needs to be aware of that framework so that we can avoid again to have those common mistakes.
Thank you for that, Tony. As we wrap up our discussion here, there's a question around it's something that you have actually just touched on. How so far are we seeing financing lends to green projects looking from an asset quality perspective? I think this is someone looking to see when you compare the NPLs associated with green financing versus, if I could call it, ordinary financing. How do they compare? If at all, you could share some thoughts.
Yes, thank you, Julian. It's a good question in the sense that now, as we have started seeing projects in green finance. There are not so many right now. So which means because it's not a big portfolio for banks, definitely the risk of NPL are less than in other sectors. Now, let's look at ourselves in then the next 5 years to come, next 10 years to come. Those projects will be growing. Growing means also it grows the risk. The risk grows with the portfolio. Now, what we have to do, as I said from the beginning, awareness, training, information will be key to avoid to increase that risk on the NPL portfolio. But if that homework is not done by banks, yes, that's where we start seeing the gaps in the risks. But the NPL will go up. It's something that we don't want. It's something that we can prevent by training people, doing awareness, talking to people, responding to their questions, visiting our clients. It's very, very important not just to call a client when something goes wrong, but even in the meantime, when things are going well, to check if there is anything that we can support as banks. We have seen really when you follow a client from the beginning and you continue, not just you give him a loan and then you forget. And then you start calling him when the third payment, consecutive payment is not done. Sometimes it's late, sometimes it's too late. So the way we can avoid that is really a follow-up of the client, even when things are going well, so that you can prevent any challenge that can through. So again, it's our homework to now make sure that as the portfolio of green project grows, it doesn't grow with the risk to the NPL. So that's really my call for even my counterpart in other associations.
Thank you so much, Tony. I hope you can get me loud and clear. We have 5 minutes to go, so I wanted to invite you to make your closing submission.
Okay, thank you. Thank you, Julian. As I said from the beginning, it was really an honor to be participating in this chat with you and in partnership with my counterpart in Uganda, Kenya, and Tanzania. In my closing, I want to emphasize that the adoption of green finance in the East African community banking sector is not just a trend, if I may say. It's a responsibility, and it's a responsibility to everyone. It's our responsibility to our environment. It's our responsibility to our community. It's our responsibility to our future generation to come. Green finance aligns with the principle of sustainability and ethical banking practice. Make it a powerful tool for positive change. Let's be part of that positive change as an industry. As we conclude this session, I'm reminded of the words of Margaret Mead. Never doubt that a small group of thoughtful, committed citizens can change the world. Indeed, it's the only thing that ever has. In the context of promoting green finance in the East African banking sector, we are those thoughtful, committed citizens, and our collective effort have the power to drive change and to drive the positive change. Green finance is just not a concept. It's a journey that leads us to a more sustainable and environmentally conscious future. The challenges we are facing are real, but the opportunities are also abundant. It's through sessions like this one and the collaborative efforts of banks, of association of banks, government, and environmental organizations that we can collectively shape the future of our region. As we move forward, let us keep in mind that promoting green finance is not only about economic prosperity, it's about our shared responsibility to protect our planet, our future. It's about building a society where banking and finance contribute to the well-being of our environment and future generations. I'm encouraged by the commitment of our region, financial institution, and professional to adopt green finance practice. Let's continue working together, learning from each other, and collaborating to build a more sustainable East Africa community. Thank you for joining this session, and I look forward for more collaborative efforts toward greener future. I really thank you, Julians, for your time, and also thanks all those participants who asked questions about the green finance. Let's work together, and I hope to see you soon again in this conversation.
Thank you, Tony. That's been Tony Francis NTORE, the Chief Executive Officer of the Rwanda Bankers Association. He has been speaking to us on matters of green finance within the banking sector in the region. I hope I am amply audible as we get to the close of our discussion this morning. I have seen two questions asking where can the recording for this conversation be found. This has been made available for the previous discussion, and I believe also for this one, it will still be made available via the YouTube channel of the Kenya Bankers Association, or whichever other means that we find it worth it to bring it to us. Next week, same time, we will be having a conversation with Mr. Boaz Nimpe, the Executive Secretary of the Burundi Bankers Association, and our topic will be on strengthening East African community financial markets, harnessing opportunities, and navigating challenges. That's on the 3rd of November, which is next week on Friday, between 10 a.m. and 11 a.m. So be sure to join us once more. Thank you so much for tuning in. Thank you for your session, your questions. Let's do this again same time next week with the Executive Secretary of Burundi Bankers Association. Thank you, everyone. Thank you, Tony, so much for it.
Thank you. Thank you, Julia. Bye from now.